Tell me about how your business is going. I get asked a lot about it. How's your business?
Pretty good. I mean, we were all doing a lot of business, because the rates were low and everybody was buying. And so that was a higher number than normal. And now we're kind of what I would call in a mature market for us. We're real fortunate. Our business is kind of stable right now. And not everybody else is feeling that way. But I feel pretty good about business. I mean, we still have a lot of first-time home buyers. Mm-hmm. They want to get into the market. They're kids your age that are ready to buy, and the parents are trying to introduce me to their kids so that I can give them good, solid advice. And we get a lot of people with life changes. They're getting divorced. Or one of the things I'm running into is a lot of self-employed people have been doing good the last couple of years. So their tax returns look good. They got money in the bank. And before, maybe they didn't feel so good about how their business was going. And so now they're ready to jump. And, people complain about interest rates. And, I think the normal market range is 5 to 7%. We're a little bit above that right now. But, there are people my age, remember when they were 12, 18%. So eventually they'll come back down, and I think we'll be okay. What are you seeing?
Yeah, you hit the nail on the head. I would say that business was obviously really good the past couple of years for anybody in the mortgage business. And then the rates went up. And when the rates went up, the demand came down. That's how it works. And it's come down. It's 35% down, but stable, right? So I think that's kind of the key is that, I think there's a perception in the world right now that people in the mortgage business are dying. And it's like, well, maybe some, but I feel like we've done a pretty good job with first-time home buyers, which is the only people that are really buying right now. So I just went through my list of, all of our customers, and I was kind of looking through it, and I was like, okay, who is on here right now? First-time home buyer, first-time home buyer, first-time home buyer, second-time home buyer found his dream house, second-time home buyer found his dream house, first-time home buyer, first-time home buyer. So, and you have some big life changes sprinkled in there, right? So you've got people having kids that need to upgrade. A lot of people are doing HELOCs right now. So yeah. Amy's getting crushed with HELOC requests because a lot of people have equity. And so, they don't want to move because they want to keep their 3% rate or their 4% rate. So they're taking out HELOCs on their house, which we can do. So give us a call.
Well, what's happening. A lot of people haven't thought about that, but there are a lot of people that have a lot of debt. They're saying that the charge card amounts are high. So if you got a tremendous amount of debt, then even though you've got a lower rate, it still might be better to dollar cost average what that would be. So if you're paying 20% on a Visa, and you got a 2% on your mortgage, there may be that 7-8% range in between might be still a cheaper payment if you're having cash flow problems. So, I've seen a couple of those. I'm helping some folks out.
Our folks are, they're remodeling a bathroom. They're adding a wing to the house. They've got so much equity. They're adding to their property so they don't have to move. But, generally in the market, low inventory. What else are your agents saying? What else are you hearing and seeing?
Well, what I'm trying to do is win deals by getting the customer what I call teed up and ready to go. So I'm having great success with when I'm talking to somebody, especially first-time home buyer, or really anybody that's going in. There's such low inventory. There's still competitiveness on the really good houses. So you want to go in with your best foot forward. So I'm telling people, let me get your credit. Let me have all your information. So when that other agent calls me and says, hey, I just got an offer on this house with so-and-so, tell me about this customer. And I want to be able to say, hey, they got great credit. They got the money. I got it all right here. This is a rock star customer. This deal's going to close. And the agents love hearing that. And so I'm winning deals that way. That's the way I'm doing it.
Yeah, I'm seeing this is kind of cool. Because we can go so fast, we can turn financing quick. We can turn appraisals quick. I've been actually caught off guard how many of my buyers are winning competitive business. Homes on the market that are lots of competition, lots of people want in there, and we're able to go in there. And because we've pre-approved them or approved them fully on the front end, we can do that quick financing. We can turn the appraisals quick, and our customers are getting these houses, assuming they want to offer what they need to offer for it.
Yeah, a lot of people don't know this. Connor called me one day and said, hey, we got to get faster appraisals. And I said, here's the appraisal management company guy's name. Give him a call. And Connor goes, what do we got to do to get a quicker appraisal? And the guy said, just pay more. And we said, okay. And so we started winning deals by offering quicker appraisals and trying to get them done during the due diligence times. And I think, I give Connor credit for that. I think he kind of pioneered that. And so he won a lot of deals back when competition was tough because we found a way to turn these appraisals fast, and it costs more.
2 and 3 days. It's the fastest that I've heard of. Truly, it's the fastest I heard of in the state.
Yeah, and so a lot of people are starting to get onto that. Some other mortgage friends are going, hey, we want to do that too. But I think you kind of pioneered that. So I got to give you credit for that. So it's pretty cool.
First time he's ever said it. Caught on camera. Caught on camera. Documented.
But what do you think's the future? What are you telling your customers about what you think where we're headed?
I've told everybody, if you find it, I've told everybody right now, the perfect buyer is someone who finds their dream home who can stomach the payment for 2 years. Well, why 2 years? Well, I think 2 years is a good forecast for the rates to come back down. When you look at historical trends, you look at all the data. I mean, everybody's got their own opinion. Some people say less, some people say way more. It just depends on who you hear from. But I think it's a 2-year period of low inventory, a little bit higher interest rates. But I think in 2 years, we might see those rates come back down. And I think we'll have a wave of refis come in from all these people who have purchased with their rate in the 6, 7s, and 8s. 8s, brutal. And so that's kind of where I think it's headed. Is I think the rates will come down. I think there'll be a wave of refis, and I still think that the perfect buyer is somebody who might be their first home, but you find your dream house and you're willing to stomach the payment for 2 years. We actually we personally have invested in that belief. We've bought properties investing and hoping for the rates to come down over 2 years. So that's what I would say.
Yeah, and I think a couple of things. So I think it's like 70% of people in America got a loan below 4%.
Yeah.
So that keeps you from not wanting to move because your payment's going to be higher. And then the other thing I tell people is when we had the crash in 2009, all the what I call baby builders, your local builders, your guy that was your neighbor that built houses and he built 5 or 10 or 15 houses a year, a lot of those guys aren't doing that anymore. So we really kind of only have tract builders that are out there. So there's always going to be low inventory right now because we don't have as many people building as many houses and taking as much risk. And I don't think that changes, which in my mind keeps us out of a serious situation of housing depreciation. I don't think we're going to see that. It might come down a little bit, but it's not going to be like it was in 2009. There's just not enough inventory. And so with that belief, I don't know how long we're going to muddle along in this economy like we have it. At first, I thought we were going to come in and out. Now I'm kind of thinking it's going to muddle along a little bit longer. And, the Mortgage Bankers Association, National Association of Realtors, Fannie Mae, all those folks are saying they think we're back to 6% by the summer. I don't know if that's going to happen or not. I mean, right now we're starting to see a little rate trend today that it's kind of, we kind of maybe have peaked out a little bit. But even if we haven't, I do still think over time rates come back some from where they are. But even if they don't, it still makes sense to buy right now because we had an extraordinary time where we had really, really, really low rates. And so the normal rate environment, like I said, is 5 to 7% range. We're just slightly above that. And I think that you're going to get a chance to refinance if you buy in this market in the next couple of years. So, I think the inventory being low, you still always have this appreciation over time. And I keep telling people that the reason why you buy real estate is because you get the appreciation going this way and you get the pay down of the mortgage principal this way. And that's that gap that grows over time. It's a no-lose situation. So if you are in it and you're in it for the long enough period of time, you're definitely going to win in it.
Yeah, some people think that I think some people think that home values will depreciate, and I think it's important to tell people, hey, there's a difference in depreciation and a slowdown in growth, and I think that's what we're gonna see over the next couple of years. Is because there's so many homes in the market, there's so much demand to get into homes that there's this preconceived notion that the home values will depreciate. No, that's not true. Home values will slow down in their growth, an average of 3 to 5% a year. That will slow down, but home values will not decline. So I think that's important to talk about too.
Yeah. So that's just our opinion, and it's like everybody else. We have one. So I'm sure yours might be different, but that's kind of the way what we feel and what we see. So we'd be interested in knowing what you think. So, hey, if you got questions, we'd love to talk to you about it. Connor and I are available all the time. You know, we're 100% in this business, and you know, we're available on the weekends. We're available in the evenings. If I'm not asleep, I'll pick up the phone. I don't know about you. I like to tell people I'm up 24/7, like the Waffle House. You just give us a call. If I'm out of commission, out of town or something, then Connor will give you a call back, or vice versa. We work as a team. We want to take care of you, and we want to be here to answer any of your questions. So if you're thinking about buying a house, or you're trying to figure out if this is the right time or not, give us a call. We'll work through it with you. We're not here to sell you on it. We're just here to help you figure out what's the best option for you.
Yeah, we tell people all the time to not buy. So if you really want to know about your situation and hey, do we need to do this right now based on our financial situation? We tell people all the time, it's not a good time for you to do it. Don't do it. So if you want an honest, truth-filled opinion, give us a call.